The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN 9:06 a.m. Thursday morning. We got about 24 minutes to go until the start of trading, and we have markets trading higher right now. Dow in the red, but just by 6 points. You got the S&Ps positive by 6 points, trading at 46.59. NASDAQ 100. How about a price tag of 16,182? Remarkable that NASDAQ keeps accelerating to higher prices. The Dow still above 36,000. You're talking about right near record prices as well, 36,033. And how about, the Russell yesterday charging higher after the Fed as well. You take a look at that acceleration at 2 o'clock. We were trading at 2380. We were trading at 2380. That's after starting the day at about 2356. And you trade up to 2410. You take a look at it, folks. You're talking about all-time highs yesterday on the Russell, yesterday on the Dow, yesterday in the NASDAQ, yesterday in the S&P. Not bad when you consider that yesterday the Federal Reserve announced that they're going to begin tapering bond purchases, and you have all four markets for the first time in a long time, folks. The Russell hadn't seen that high. Back to the Russell. You're talking about back to March 15th. Was the high that you had. The high in the Russell, 2366. You came into that action, 2364.60. We made it up to for Tuesday action. So yesterday, the first time you got a high in the Russell since March 15th. Quite a consolidation. The Russell goes charging higher. And just like that, we got the Dow in positive territory already this morning. Crude, so much for a slight pullback. There's your action in crude. Down to 79.69 yesterday. And just like that, we're up almost $4 in the price of crude. You'd spike from $80 to $83.20 crude. Continual pressure to the upside in crude. How about gold catching a bid from yesterday's action? You trade lower into the Federal Reserve announcement at 2 o'clock, and since then this morning, gold catching a bid up to $17.93 right now. You got silver up 70 cents. Check out that chart, up near $24 on silver. Notes and bonds right now, pretty tame action. You back it up to yesterday's action. We're only about 5 or 6 ticks away from that price level. You're positive by 7 ticks right now in the 10-year, trading at 130.31. That's correlating to a yield of 1.56% on the 10-year. We got a lot of stocks with earnings. We're going to jump around, but we're going to kick things off with one of the companies with earnings a couple days ago, Zillow. You talk about some action, man. Zillow. Last week you were trading at 104. Today you're trading at 67. Whew, you talk about a haircut, folks. Monday's action rough. Tuesday's really fell out of bed. Wednesday they come out with earnings and cut the whole program. Going to lay off 25% of their workforce. Wednesday the slide continues to 63.13. You're up a bit. I wouldn't even call that an acceleration to the upside. That is $1 when you've lost $40, $41 almost from the highs. Remarkable. You're talking about a 40% pullback almost in a week. We closed out last week, folks, at 104. We're trading at 67. Now, here's the reason I bring it up. Talked about it yesterday. And the news was that Cathie Wood had bought an additional 288,000 shares, I believe it was, 288,813 to be exact, of Zillow. Well, one of the things I talked about, and this is so interesting how the game is changing a bit, is that early on when she was rising, there were a lot of articles written about how tough it was going to be to manage the type of money she's managing when you're building positions and when you're liquidating positions, when you have to announce those positions on a daily basis. So she buys 288,000 shares on, let me get it right, on Wednesday. No, on Tuesday, excuse me, yes. She buys 288,000 shares on Tuesday, knowing that information will become public, right? And, of course, she could have changed her mind with the earnings. They cut and run the whole deal. They're not going to be buying and selling houses anymore. They're laying off 25% of their workforce, so things changed from Tuesday to Wednesday. But really interesting that she adds 288,000 shares. And I pointed out at the time that I think she had like 7 million shares. Maybe they put it in terms of her total number in this. No, they don't list it on this, but I believe she had about 7 million shares. Well, she sold about 4 million shares on Wednesday, folks. My take is that pretty interesting if you're going to have the game start being that you front load your sells, right? She buys a small position to add to it. The next day she liquidates, 13 times the position. Offloaded $255 million, assuming Wednesday closed. 10 times at least the value of the shares that she purchased on Tuesday. The point of that, folks, is buyer beware, man. Watch out for those indications because Tuesday, that looked like an indication of strength. You had a big holder in that position, adding to the position on a pullback. Meanwhile, she was ready to sell almost a whole position, a big chunk of it in a big way on Wednesday. Now, what's really interesting is you put this thing on a daily. So she sold off almost 4 million shares. That is quite a position, even on a day like yesterday when you have a stock down dramatically, to say the least, accelerating volume. You're talking about doing 5% of the entire volume for the entire day. It did 80 million shares yesterday. Zillow, and I guess it goes Zillow Group. I'm not sure what she's in because they both have big volume shares. Zillow Group, you're talking about almost 13 million. So maybe she's in Z for Zillow, the one that's trading more volume, of 78 million shares. Nonetheless, you're talking about 4 million shares. Beware of those types of indications because so often now, CNBC especially likes to push, and this is a Bloomberg article I have up here, but CNBC and Bloomberg, they put out her positions as news, and a lot of people have started to begin following that, rightfully so in some degrees, but watch out for that one, folks, because it was a real heads up. Zillow, man, they are in trouble. Long term, yeah, you got quite a haircut in this stock in terms of where you've been. You back it up to even a 5-year weekly, right? You're trading at $65. We were trading at $62 in the middle of 2018. You're talking about 3 years like that, wiped out after being at 208. I imagine this company is going to be around in the future, folks, but not in the way that they were prior in terms of buying and selling houses. Those algorithms, not working, and they're cutting and run. To their credit, at least they're cutting and run. A lot of executives might try and say that we can fix it, try and save face. They said, no, we made a big error. It's not happening. That type of error could probably bankrupt the company. We're cutting 25% of the workforce, and we're moving on. And you got the stock at 65, down from 208. You're in prices that you saw last almost like 3 years ago in Zillow. All right, jumping around to what else we got going on. Take a look at some of the headlines I got up here. Fed decision. Fed to start tapering bond purchases later this month as it begins pulling back on pandemic aid. The reduction, pretty much everything that was expected, folks. 10 months at $15 billion, and you're talking about that would be basically $120 billion to back off the whole thing. The interesting part about this, and hopefully you guys hear me, I think I'm getting a little bit of a glitch here. Maybe I'm back. The interesting thing about what the Fed had to say is that their timetable might be accelerated. And the market just takes in stride, very dovish statement, that it's just interesting how everything gets paired and the market just takes it in stride, even notes and bonds. Folks, you talk about a taper tantrum, nothing like it, right? I mean, we're back to where we were trading yesterday at 9:45 in the morning. We'll talk about it a little bit more when we get back. We're going to talk to Kevin Hincks of TD Ameritrade Fast Market. We got some earnings coming up tonight. Stay tuned, folks. I'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com. educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps up by 7, NASDAQ 100 up by 51. You're going to have all the markets, all 4 of them. Dow up by 6, Russell continuing strength up by 12, opening near record territory on the open. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, fast market. Kevin Hincks, Tom White, the team at the TD Ameritrade Network, walk you through the day's market action, talking about hypothetical trades. Boy, where do we start today, Kevin? We got a lot going on. Fed day yesterday, earnings. Good morning.
Good morning, Tommy O'Brien. Yeah, today should be a quiet day ahead of tomorrow's big economic data, but there's actually a lot going on this morning in terms of some of the data we got, some move by the Bank of England, or lack of move by the Bank of England. Jobless claims, really good number. International trade in goods, the biggest negative trade balance ever at negative 80 billion. Productivity and costs. It's a good thing that that's not a top-tier economic number because it's kind of ugly.
Yeah.
But we're passing over a lot of that because, jobless claims were good. Looking for a pretty strong number tomorrow out of payrolls. So a lot of anticipation here in the market, Tommy.
It is pretty cool. Like you said it, man. I was getting ready with the program, going over everything, and it was a busy morning, man, for like you said, kind of a little bit of a lull. Normally, if you're getting a Fed day on Wednesday, you got non-farm payrolls on Friday, and Thursday, as you just mentioned, some of those numbers a little tough, man. In terms of productivity growth, they were looking for a decline of 3.2%. It fell 5%. You add that into unit labor costs, which is a combination of the productivity decline plus a 2.9% increase in hourly compensation. Unit labor cost, of course, unit cost coming into everything. But the jobless number, that's a pandemic low, Kevin, to keep marches on. Seems like the trend is our friend right now for the jobless number. We'll see if the non-farm payroll number tomorrow would agree with that. Jumping back to the Fed a little bit. So the market pretty much takes it in stride. Chairman Powell pretty much to expectations with the $15 billion taper. What did you think about kind of what Chairman Powell had to say about maybe having some flexibility of the schedule of that tapering and how that might affect interest rates, Kevin, and what they decide to do in that timetable? Because we were chatting yesterday, and you rightfully said, they've got 8 months or so at least, and you won't get a rate hike until they've tapered back to zero. But he left a little room there for maybe accelerating that. Maybe rates come into the picture if they accelerate that bond tapering at all. What do you think?
Well, I listened obviously to every word Jerome Powell said yesterday, and I think the way he has been managing this economy has been nothing short of brilliant. I said it before. He's the most effective Fed chair in my professional career. And so he basically led us to, he could announce the taper yesterday with no market effect. And that is pretty amazing that he could do that, right? Why?
I agree.
Because he's been telling you about it since early summer. So he was able to do that, but here's what he did. He differentiated between tapering and raising interest rates, and he made a clear distinction between the two. And, as he should do, he left himself flexibility to change if something in the economy changes. He could speed up, he could slow down. Jerome Powell, and it's hard for him to say this in a press conference where he's answering specific questions, he wants to be able to move with the data. And the data is showing that he's on pace, on course. And so think about it, $120 billion in asset purchases, $15 million a month, or $15 billion a month, 8 months, right? That means by mid-next year, we should be done with all asset purchases. Then he'll look at the economy and see where we sit and see if rates need to be hiked. And it'll depend on how transitory inflation is. So he's got this market, as he should, the economy on dials. And he's ready to dial and move if he needs it, but he's not moving unless he needs to, Tommy.
I mean, it's pretty cool, man, and I agree with a lot of what you said in terms of just, I mean, the magnitude of a statement like that usually, Kevin, right? The magnitude of the programs that the Federal Reserve is pushing into this market right now. And on the day that they announce that in 6 months, or 8 months, it's all gone, basically. At least $120 billion in asset purchases are off the table in 8 months. And on that day, Kevin, we get all 4 markets closing at all-time highs across the board. The Russell for the first time in, 8-9 months, something like that. So to his credit, I agree. As a trader, it's pretty cool. The potential volatility, at least, because the number of variables that are up in the air right now as we go forward. I mean, we got holiday season coming down the line. All we hear about are supply shortages, supply chain issues. So there's a lot of volatility that might go into those numbers, man. And as traders, sometimes, as we know, volatility can be a good friend. With that, Kevin,
Tommy, think about this. Think about this. The term taper tantrum was the product of how Janet Yellen handled the last time this happened. So the fact that he was able to manage this without any issues shows the difference between how he's handled it and how other Fed chairs have handled this.
It's pretty amazing. I mean, the dollars that we're dealing with are almost unfathomable, man. And to pull them off the table over 8 months and have the market just be ready and taken in stride to all-time highs, like you said, pretty cool to get that done. Not an easy feat, to say the least. It almost looks easier than it is, Kevin, because it's been such a slow, smooth ride. But that's why I said the magnitude of those programs, man, in any other world, it'd just be bananas, to put it lightly. Getting back into the earnings, Kevin, we got a bunch of companies out, whether it's after the bell tonight. We got some companies moving this morning already on their numbers, but a bunch of companies tonight, some companies tomorrow morning. What are you guys going to be checking out on Fast Market coming up at noon today?
3 good ones, Tommy, 3 high-profile names. First, we'll look at Square, Jack Dorsey's other company, the payments space, and then we'll look at Peloton. Like Foley will do a presentation on Peloton, and then we'll look at Uber, the other movement ride-sharing company that comes out with earnings today as well. So 3 really good ones today.
Pretty cool. I like all those stocks, man. Square, that payment processing sector, just been on fire, but Square's had a little consolidation. And Uber, we have some Uber in my newsletter, folks. Rocket Equities and Options, catching a big lift, no pun intended, on Tuesday. Lyft earnings, beaten in a big way. You've had Uber pop. Always kind of interesting when you get a stock that's trading off their competitors' earnings, right? Expectations increased a little bit because Lyft over-delivered, and we'll see how Uber comes out after the bell today. Is that today, Kevin, I believe?
Today, yes.
Perfect.
After the close today. All 3 of those names.
Awesome. Kevin, we appreciate the conversation. We love the education, man. We'll be watching at noon Eastern time today.
Thanks for having me on, Tommy. Have a great day.
You too, Kevin. Folks, tune in. You heard the names they're going to be talking about. It's earnings season. They set up hypothetical trades for all of those equities. They'll be doing it at 12 noon Eastern time today, as well as talking about everything else we have going on in this market and turning Fed. And, of course, non-farm payrolls tomorrow, potentially affecting things. Back to the markets. S&Ps right now holding steady at basically all-time highs. You're about 3 points away. We're positive by 6 points right now for the open. You got the Dow basically flat, negative by 7. NASDAQ 100. Talk about some NASDAQ strength, man. Remarkable. And I've said it before. If you think about, folks, when Apple and Amazon both missed last Thursday, some were saying that was a foretelling sign, right? You got one of the two biggest companies out there reporting on Thursday. They both missed pretty dramatically. Well, guess what, folks? You got the NASDAQ 100 almost 500 points above that price level. Remarkable strength across the board. Let's check out some of those FANG stocks right now. Amazon was up 2.15% yesterday, folks. Quite an acceleration. You're backing off a bit this morning. Microsoft has just been on fire, man. Backing off a bit today, but you traded up to 335.92 overnight. Remarkable. Stay tuned, folks. We'll be right back for the open.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets open. All the markets in the green right now, with the S&P up by 5, NASDAQ 100 up by 41. Dow slipping back into the red, but only by about a couple points right now. And the Russell, talk about some strength, as I talked about. I mean, check out this move just from last Thursday, going back 5 days. 160 points, folks, on a $2,250 index. 160 points. Can't overstate the move that the Russell had. Crude holding on to that strength at $83. And how about gold continuing to rise up an even $30 on the session at $17.93 for that gold contract. Jumping around to other stories out there, we'll get to a little crypto. Now, Bitcoin down about $1,000 before we get over, holding pretty steady at $62,000 in Bitcoin. Shiba whale, and what is the exact term of it? Shiba Inu. Named after the same breed of dog. This has been the new on fire token. $51 billion was the market cap at the highs. Now it's pulled back to a high of $35 billion. This article does a good job of talking about whale wallets with billions raise alarm of crypto sleuths. And what's going on here is, it's been talked about many times, but so often the ownership of the cryptocurrencies are consolidated in the very, very top echelon of accounts. Getting into the numbers here, because they're pretty staggering when you look at how few accounts hold how many of the cryptos. Come on, where's my... Okay, ownership in Shiba Inu is especially concentrated. There's 872,000 wallets that hold some form of the token in some level of ownership. The top 10 accounts own almost 3/4 of the market, folks. Now, to put that in context, the whole market is worth $35 billion. So 10 people, 10 entities own almost 25 to 30 billion of that 35 billion market cap. You don't think that a market can go down fast, folks? Watch out when you have 3/4 of the ownership in 10 accounts. Now, the biggest wallet holds a whopping 41%. Now, these could be the founders, too, is what happens. Theoretically, worth almost $21 billion at the peak. Number 2 currently holds a bit more than 7%, worth about $2.5 billion at current prices. This is why stories like this are why people love cryptocurrency, folks. I think I read a story about Shiba that one of the accounts, and it might be this number 2 one, spent $8,000 right at the beginning of Shiba, and that's the one that ran it up to about $5 billion. Did you hear that? An $8,000 trade in basically a worthless cryptocurrency, and you're talking about multi-billion dollars. Now, to get into it a little bit more, it looks like there were 4 transactions out of that account yesterday. You can track the movement in some of these accounts, each sending about $700 million to different accounts. So a total of $2.8 billion of Shiba Inu was moved around. Whoever it is purchased it on Uniswap about a year ago for not very much. Imagine that, folks. And this is the tweet I was talking about. 8,000, there it is, to 5 billion. And they just removed 2.9 billion tokens from its original wallet. Now, again, they have not sold it. Okay, they've moved it to different wallets. But that is suggesting that they might be starting to sell that. Now, they get into Bitcoin, which is remarkable. All right. Many of the smaller, more than 13,500 cryptocurrencies are majority owned by a handful of wallets. Between 20 and 50 crypto trading firms are pushing most of the volume in crypto. They do get into the Bitcoin numbers down here. I want to pull those up because even in Bitcoin, yeah, check this out. So Bitcoin, you think, is so prevalent, right? 2,000 entities own more than 40% of all Bitcoins. Now, there's a cap number of Bitcoins out there, and what is it, like 20 million, 19.5, 21 million, something like that. Only 2,000 entities own almost half of the Bitcoin market. The whales, it is a real deal in crypto, which is why volatility is so pervasive when you have such small numbers of participants owning almost the whole market. Not surprised to see the statistics of Shiba Inu in here. Pretty surprised, actually, to see, even with how big Bitcoin has been, that you got 2,000 entities owning more than 40% of all Bitcoin. Now, I wonder how the one account that has been inactive forever, that might be the creator, Satoshi or whatever. They own a bunch of those Bitcoin. I wonder how that plays into things. But nonetheless, be aware of it. If you're ever in one of these things, you catch a run, folks, don't be afraid to sell. You can't claim a profit if you never sell. Remember that, because you see these types of runs. And we've seen for every one of these there's probably been 100, if not 1,000, that go up 100 or 200% from their fraction of a penny and then end up in zero. It wasn't a Squid Game cryptocurrency that went to zero after being up 200 something crazy percent, like nothing. So be aware. In a big way, 10 people own 3/4 of the market in Shiba Inu as you look at that crypto that's been on fire recently and pulling back. All right, jumping around to actual market action going on. Let's jump down to some of the stocks that are moving. You know what? I'm going to jump to Kroger real quick first, because this is an interesting one. Kroger taking on Publix in Florida. I'm in Florida, a little biased, without opening a single grocery store and building a blueprint for its future. This one will just make you think about the future, folks, in general, in terms of the fundamental shift that is going on to the way companies do business. So check out this deal. They are building what they are calling sheds. Automated sheds are a key piece of the company's growth strategy in an effort to turn e-commerce into a bigger, more profitable business in a notoriously low margin industry. So Florida is ground zero as Kroger rolls out a national strategy to become a more dominant e-commerce player. It's invested at least $55 million in just one construction of its quote-unquote sheds alone. It hired 900 employees and counting across the state alone. Okay. Now, 3 years ago, they struck a deal with British online grocer Ocado maybe, to build a network of customer fulfillment centers, which it calls sheds, across the U.S. It chose that company because of its track record in the U.K., where it's gained popularity with its customers. Kroger's opened 2 of those sheds so far, with a plan for at least 9 more of them over the next 2 years. I don't have any Kroger in my accounts, folks. You see the acceleration this thing has had. Excuse me. You take a look at the daily, though. We're coming off the highs we had back in September of $47.99. Quite a pop we've gotten over the last week or so. You take a look at a little longer-term time frame. The trend is your friend here from lows in 2019, when I think they thought this might have been, is that 2017? Maybe that's when Amazon purchased Whole Foods. That just could have been their earnings. These stocks have been hit pretty hard as the market fears that they might be in big trouble. And I thought we had a peak back here. You got to go back to the end of 2015. Basically, that's right where we are, folks. But that's a pretty solid plan. And I'm going to start looking at it a little bit more, because it almost sounds like the ghost kitchen plan, right? You're not opening restaurants. You're not opening grocery stores, which we all know. I mean, grocery stores are enormous, right? Imagine the cost associated with keeping those displays active, et cetera, versus just having a warehouse of goods that you ship out with your customers. And I tell you, I use Instacart, folks. I have over the last 16 months or so, basically since a couple months into COVID. And with kids in the home, yes, you're paying a premium price for that service. Kroger probably going to try and cut that out a little bit, but I enjoy the service. It's worth it. The amount of time you spend grocery shopping, getting things into your cart, getting them into your car, bringing them home. People adopting that technology, and Kroger with a pretty cool business plan. All right, folks, we got a lot of companies moving with earnings. We'll come back. We'll get into them all. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We'll take a look at a couple trend lines. Our man Baseball and the YouTube Tigers Den, he's talking about the Qs. We'll get to the Qs next. We're going to start it off with the S&P first. S&P, pretty interesting here in terms of the acceleration. You had quite a nice channel, I should say, going basically from May till September. You traded down hard at the beginning of September, well out of that range, and remarkable, folks. The S&Ps from a price point of 42.60 at the beginning of October, we're trading at exactly, folks, 400 points as I speak higher, and it's November 4th. 400 points higher. That's a 9% pop, basically, in that time, and you are back in the channel, which is remarkable. Now, not sure that that channel holds steady with this type of action outside of it, but that's nice action if you're in the S&P. A little bit of a different scenario if you take a look at the NASDAQ 100 for the Qs. The Qs, now that trend line we were just looking at in the S&Ps went from May. Okay, this one in the Qs was a little bit more solid, going back all the way to, we're talking about really September of last year. We're talking about November is where things really accelerated when we got the vaccine data and the market starts to take off. Remarkable that we're pushing the upper boundary. This channel line in the NASDAQ 100, folks, it has been solid since we came out of COVID and got the vaccines going back to September or November. We shorted the Qs back when this thing was early September, somewhere in here in my newsletter. Didn't ride it all the way down, but didn't have to. Wasn't sure we were going to get the full pullback to the lower trend line, but I put it in my newsletter this week, folks. Sometimes channel lines, they are so cool how they trade. You look at where we've been, folks. You go from the upper boundary to the lower boundary, and just like that, and pretty cool that you're talking about right at that upper boundary right now, 394.90, and you see what happened the last time we were up there. Remarkable that you're talking about 2 months ago already. In the span of 2 months, you had the Qs trade down about 30 points, which was like 7 or 8%, and just like that, folks, we're up 45 points. You're talking about, what is that, 11 or 12% pop. You want some volatility in these tech stocks, watch out. But anytime I see anything, whether it's an equity, an index pushing that channel line on a channel line that has consistency, folks. You're going back a year and a half. Every time you touch the top or the bottom of that channel line, you bounce. And you see it right there. And just keep that on your radar as we're to the top. I mean, how high can these tech stocks go? It seems like every day you wake up and this NASDAQ 100 is in higher territory. Remarkable. You think the COVID lows, folks, were under 7,000. We're trading at 16,205 right now in the NASDAQ. But hey, I mean, check out some of these stocks in that time. You got Microsoft. Microsoft was down at 133. You're trading at almost 333. Amazon's basically a double, and Amazon has lagged this year, barely positive, but Amazon was down at 1,600. You more than double that equity. We talked about Microsoft. Google's been on a tear. I mean, look at the trend line in Google. Google making its way back into that channel line as well. Google, from a price point, really where I started the NASDAQ 100 at 1,400, you're trading at 29.55. Strength across the board in a big way. All right, let's jump down the line to some of the stocks that are moving right now. Planet Fitness will start off. Planet Fitness was higher pre-market. We'll see how they're trading on the open, but they beat on the top and bottom lines, raised the full-year revenue forecast, adjusted 25 cents per share for earnings, 7 cents above estimates. Looks like people are getting back into the gyms. There's your Planet Fitness acceleration. We're up right now 7.5%. We'll put it back on a little bit of a shorter term time frame, up to 88.93 from a close yesterday of 82. Viacom was higher pre-market, quarterly earnings basically in line, revenue better than expected. Results got a boost from strength in the company's streaming and TV business. Viacom, V-I-A-C. They were higher, not so much right now, down 0.75%, giving it back at 37.27. Moderna, yeah, their vaccine revenue not living up to the expectations of the market, 16.6% down. Now, this thing has just been so volatile. Up to almost 500, back down to 350, up to 450, down to 300, up to 350, and just like that, we're back at prices that you haven't seen in Moderna, pushing back to July when this thing accelerated, and that is following Pfizer beating on their numbers, but Pfizer down almost 1% today as well. Wayfair. Yeah, Wayfair. Check this out. Let's see. Yeah, I thought that it was going to push down. 4% didn't seem like much for what they were talking about on this equity. You're down almost 10% for Wayfair. Now, putting this thing in for some context, you're basically in a consolidation going back the better part of 15 months from a price level of like 235 on the lower boundary line up to 350 about on the top portion of that. We're right near the bottom portion of that. Wayfair, unexpected quarterly profit, but saw revenue fall below analyst estimate. You don't want to see revenue miss and earnings beat because that's not a success, a future success recipe. Noted that spending has started to transition toward brick and mortar stores post-pandemic, and it may take a few quarters for its growth to return to normal levels. That's a pretty worrisome statement, folks, when you get it from executives saying it's going to take a few quarters for growth to get back to where we want it to be. Doesn't mean it's going to happen at all. That's the best spin possible. Anytime you get executives, folks, I mean, they're always trying to pair, right? You put out the best message possible without making it unreasonable. That's probably their statement, because when you have strength in your equity, that's market capitalization that you can use to loan against, et cetera, right? So there's an inherent there's inherent interest as a business executive of a public company of presenting the most positive spin possible while remaining reasonable for all disclosure standards to keep that share price high, because that in itself provides strength to the company to get over the hump that you may need to. Be wary of statements like that. Says, just give us a few quarters, we'll get that growth back up there. The market says, we're not sure we're cool to wait a few quarters. And you got Wayfair down 10% right now, down $27 on their numbers last night. Yeah, bookings. So let's check out bookings. I think they're going to get a pop. Let's see where we're trading. Up 1.8%, giving back actually some of the gains you had pre-market on bookings. Strong numbers on bookings. We had Airbnb trading a little bit higher today. They're the parent of Priceline, $37.70 a share. Market was looking for $32.90. Cautionary comments about COVID-19. That's probably what's hitting it a bit, but better than expected profit and revenue for the quarter. They were higher. They give some of it back. Let's see how Airbnb is trading this morning. Yeah, they give a little bit of it back as well, but they're up 1.3%. I think Marriott had their numbers, was it Wednesday morning? Yeah, they were higher, up to 166.82. They're basically flat this morning for Marriott. Qualcomm beat estimates by 29 cents with an adjusted earnings of $2.55. The revenue beat forecast. This thing was up big. Let's see how it's holding on to it. QCOM. Whew. It's running, folks, up 15% almost for Qualcomm. That is quite a gap, man. You back things up. Qualcomm going to be pushing highs we made earlier this year at 167.94. And I imagine we'll get up there if we're trading at 158.30 right now on a price. We're already up $20 today, 15%. Qualcomm, man, those chips in a big way. 5G, smartphone technology accelerating. EA Arts, $1.49 a share. The market was looking for $1.17. There are a lot of beats today as I was going down the line. Roku, not one of the beats. We're going to get into Roku, man, and see how they're trading. But Electronic Arts, let's see how they're trading on their numbers right now. Up about 3%. A little bit of volatility pre-market, and we'll get to Roku. Look at Roku. Strength in Roku. They trade down to almost 280. You're back to 301. Now, I was looking at Roku here. When this thing was down, if you're looking to get into Roku, maybe that 271 area. We'll talk a little bit about this when we get back, folks. That would be the level of the retracement going all the way back to the COVID lows of about $56. You were up to $490. You're trading at $298 right now for Roku shares. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Taking a look at Roku. So Roku down about 3.7% on their numbers. Jumping back to that Fibonacci number because Roku, they have a future, folks, for sure. Where that future begins at price-wise on their equity, then you better watch out anytime you get this type of a move. But you always love an area that you can get your back against the wall, folks. Not sure we're going to get back down to 271, but you traded right down to that area okay, in May, and that was off of a high you had at about 490. What is the exact high? 486.72. You eclipsed that high by $4 in July, and then you trade almost right back to that area. We made it down to an exact low in May of 272.41. You get back down to that area, at least you got your back against the wall, because you trade below that area. And where's your next stop? Next stop is probably $200. You trade below 272, so I wouldn't give it a ton of room. You can step into some of those equities I was talking about. Some travel stocks with one of my friends yesterday, talking about even some of the cruise ships and saying, man, they're so volatile, but you put your stops in, folks, stops, and yeah, you can get some overnight action sometimes. But volatility can be a trader's best friend. You just got to use those stops if you trade in volatility like we have in some of these equities right now. The other stock I wanted to jump over to was MGM. So MGM, real quick, the headline on them, they're going to sell the operations of its Mirage Casino. The good old Mirage. Played plenty of good poker nights in the Mirage. No sales agreement been reached, however. It did not disclose the name of any potential buyer, but nonetheless, MGM up about 0.6% today. And jumping around to some of the other stocks with action, Amazon continuing the run, man. Up another 1.5% today. Folks, you're up 2.1% yesterday. You're up 1.5% today. You're talking about almost a 4% pop on Amazon shares from yesterday alone. Look at that acceleration you're getting right now on Amazon shares. And Etsy was the last one I wanted to look at. This is a cool one, folks. One of the good things and bad things about options is that you can't trade them when the market's not closed, okay? But sometimes, man, you got to wait until the market opens to see the true move. And look at that action on their numbers. You trade down to 227. The conference call goes last night. The market opens, and you trade up 15% from where you were, basically from 235 to 265. You're up 11% on the day. They got big upgrades. Oppenheimer has a price tag of 285 for them. Stay tuned, folks. Live programming all day. We got some good earnings tonight. Airbnb, Pinterest, Peloton, Shake Shack, Square, Yelp, Uber, Canopy Growth tomorrow morning, DraftKings tomorrow morning as well. Basil's up next, folks.